Well, on to the big event of the evening. The NSO, or the National Statistics Organization, will be announcing the July CPI number at 4 this evening. A CNBC-TV18 poll is expecting the July CPI to be at 1.3% compared to 2.1% that was reported in June. Latha is here with more expectations from the CPI. Latha.
Yes, 1.3% is what our poll threw up as the July CPI. And remember, even the year-ago number is not very big. The year-ago number is 3.6. which is also below the mandated number of the MPC, which is 4% CPI. On top of that, which means inflation is really running low. And by the way, there's a record: 1.3 is the lowest ever after the new CPI a data series started in 2013. So this is really some kind of a huge record. But it's largely because of food. Food is going to be deflationary for a second month in a row. It was minus 1.06 in June. It's going to be minus 2 in July. Much of this is, of course, the base effect. But cereals and pulses are clearly falling even month on month. The good monsoon is, again, helping sentiment as well keep the prices lower. Core CPI is expected to fall a bit. Here now the base effect is wearing off. Last month it was at 4.4%, that is June it was at 4.4 because the base was 3%, but now the base starts rising to 3.1, 3.2. So we are seeing some impact on the July CPI. The core CPI will be somewhat lower. While all these numbers look very good, 1.3, lowest ever in the series, it's not going to have any impact on the bond market for the simple reason that, RBI brought down on August 6th its forecast for the full year to 3.1 and remained unmoved. It merely seemed to say that we are going to look at the year-ahead inflation, which is 4.5 according to their estimate or on their forecast. So it didn't look like a central bank looking to cut rates. So the bond market is going to largely ignore it. And they may, just after 1 hour, the CPI comes at 4 o'clock. By 6 p.m., the market will simply veer around to what? The US CPI number. The US CPI number, of course, I'm just quoting you Dow Jones Newswire's poll, expected to rise by 2% month on month and 2.8% year on year. The core CPI, of course, is more important from the Fed's point of view. And that's not looking good at all because it's going to rise by 0.3% month on month if the Dow Jones poll is correct, and by 3.1% year on year, which is a little worse than what it was in June. The June numbers will also come up for you. The June number was 2.9% year on year. So actually inflation would be seen inching up if it came at 3.1. That would be another good reason why the Indian bond markets will sulk. By the way, they've been sulking big time, okay? Bond yields after the RBI's hawkish tone had started rising. The 10-year bond yield today at 6.43 is 10 basis points higher than what it was the day before or even the 1 hour before the RBI announced its policy. It was 6.3. And more importantly, it is a full 25 basis points higher than what it was at its low in end May. It's almost as if a rate hike has been announced if you look at the 10-year bond yield. So whatever joy you're getting in the inflation number is getting wasted on the bond markets.
Well, thank you so much for that picture, Latha. We'll definitely be keeping an eye out on the CPI data from India as well as the US. Take a short break then. More news and updates follow after the break, so don't go anywhere.